What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. There's one thing that investors can absolutely not stand: uncertainty. And do you know what gives investors more uncertainty than anything else? Trump's tweets? No. Young people. Who, me? Uncertainty makes it hard for investors to make money because they can't figure out what kind of avocado toast millennials are gonna be eating tomorrow. California avocados, invest in California avocados. People under the age of 40 were the first to really start spending money in technology, which caused a huge change for investors. And now people under the age of 25 are shaking things up even more and investors can't keep up. This has the majority of traditional investors confused, but if you watch this video until the end, you will understand new spending trends. This way you know how to invest your money for the future. But before I get into that, make sure you hit that thumbs up button below because it's kind of like a virtual high five, and subscribe to the Minority Mindset YouTube channel. That way you don't miss new videos every week. First, beauty spending. Young people don't care about how they look anymore. Well, maybe they do, but they're not buying makeup the way they used to because beauty spending is at the lowest it has been since the last recession for young people. Who needs makeup when you have filters? Traditional investors don't know what to do about this because people are not buying makeup the way they used to, and when people do buy makeup, they don't think for themselves. They buy whatever Kylie Jenner tells them to buy. No, seriously. 89% of girls say that they let social media influencers tell them what's hot and what's not, and it doesn't end at beauty because number two, people are saying no to designer brands. Young people are spending less than 50% of what the previous generation did on designer purses. Michael Kors, ew. Kate Spade, oh, and Coach, more like economy. This has traditional investors scratching their heads because they don't know what Kylie Jenner is gonna tell young people to buy next. Code Red, Kylie Jenner's using Angel Soft toilet paper. Who's their parent company? So if young people aren't buying makeup and they aren't buying designer purses, where are they spending their money? Well, food. 3, alternative foods. Food is kind of like real estate. People will always need it, but young people are slowly changing the way they buy food, and traditional investors can't even taste it changing. It slowly started with people being more health conscious. Young people started by reading ingredient labels. I mean, what is pyridoxine hydrochlorate vitamin B6 mix anyways? Then they stopped going to chain restaurants like Applebee's where it tastes like your food came out of a microwave. And then they stopped eating animal products, which created this whole new industry of alt foods like alt meat, alt cheeses, and alt milks. Coke versus Pepsi is the old food war. The next generation of food war will be between Impossible Burgers and Beyond Burgers because we're just starting to scratch the surface on this new food trend. To put some numbers on this, the number of vegans in America grew by 600% between 2014 and 2017, and this trend is not slowing down. For those of you who are already on our free financial newsletter, you've heard us discuss this new wave of plant-based demand and how you can be smart with your money. I mean, even McDonald's is releasing their own PLT, plant, lettuce, tomato sandwich. And if you aren't on our newsletter yet, what are you waiting for? Our newsletter is completely free and we break down the top finance and business news, and then we show you how the news affects your wallet. This way you can be money smart, and this newsletter is completely free. You can subscribe to our finance and business newsletter by clicking the link up here or by clicking the link in the description below. Fourth, new energy. Traditional investors loved investing in gas and coal and crude and oil, and did I say gas? For most of the last century, traditional energy companies had almost no competition. Then came electric cars and solar power generators and wind turbines. I grew up around Detroit, so I can appreciate a muscle car that gets 6 miles to the gallon, but let's be honest, that's not the future. Alternative energy is going to be the future, and this has a lot of investors wondering because 5, young people want businesses to be woke. Before young people spend $1, they want to know how this $1 is going to impact the world. Young people don't want plastic, they don't want to hurt the Amazon, and they want businesses to care about their communities. If your business is not community conscious, they won't give you their dollar. That is very different than how people used to spend their money 50 or even 20 years ago. This is another trend that is just getting started, which will have a lot of growth in the future, while traditional investors are still wondering why there's server didn't give them a straw. Sixth, young people don't want to leave their phones. Their homes. You can get a new pair of shoes, get your dinner ingredients, and do a group workout at home all before noon and all without leaving your home. The future is digital, if that wasn't already obvious. But the real question is, how digital can we get? And this is where smart investors can win big by investing in companies that are smart online, while traditional investors are gonna hope that Sears will come back to life. And number 7, your home. Young people don't want to own homes anymore. No, young people can't afford to own homes anymore. Home ownership is coming down because young people either don't want to own a home or they can't afford to own a home. This is changing the way you should be investing in real estate, even if you're not a real estate investor. More and more young people are renting in urban areas, and more renters mean more real estate rental companies, more property management companies, more real estate rental agencies, and more micro leasing. And that also means that young people aren't applying for mortgages the way people used to 2-3 decades ago. That's why the Federal Reserve had to keep cutting interest rate to make it easier and incentivize people, especially young people, to buy a home. No industry lives in a bubble. Like, if people are not buying homes anymore, that means mortgage companies are affected, which means banks are affected, which means title companies are affected. Each trend that I talked about has a ripple effect which affects businesses and industries around it. That means opportunity for people like you that understand what's happening and are willing to capitalize on it. Thank you for watching. If you enjoyed the video, share it with one friend, and if you don't want to miss our new videos every Monday, Wednesday, and Friday, then subscribe to the Minority Mindset YouTube channel and hit that little notification bell. That way YouTube actually lets you know when our new videos are released. And as always, keep hustling.